Everyone loves to talk about how an S Corp can save you thousands in taxes. But what are they not telling you? There are hidden costs that can surprise you if you're not prepared. And they could eat into those tax savings pretty fast. Hi, I'm Jamie Trull, your favorite CPA and financial literacy educator. And on this channel, I like to bring you all the resources to keep you informed, organized, and profitable in your business finances. So please make sure to like and subscribe. And if you're a business owner or freelancer or solopreneur, maybe even a side hustler, and you're thinking about becoming an S Corp, this video is going to help give you the information you need to make that decision. Plus, stick around to the end because that's when I'm going to share the most hidden small things that nobody seems to talk about when it comes to an S Corp that a lot of people don't realize until after they've already done it. But first, let's start with a quick refresher. Now, an S corporation isn't actually a legal entity, it is a tax election. And that tax election ultimately allows you to take the money that you make in your business and be able to divide it into two buckets. One bucket, which is your salary that gets fully taxed, and one bucket that is distributions that does not have self-employment taxes on it. So that's generally where the savings of an S Corp come in and why a lot of people recommend going that route, especially once you make a certain amount of money. Now, just to interject, there isn't a very specific line here of when it makes sense to become an S Corp. I usually tell people to start looking at it maybe roundabout when they're making at least $70,000 in profit or more. So tax savings sounds great. Who doesn't want that? But you want to make sure that you do it right. And this is the thing that many people gloss over, and many professionals even gloss over, is that there are hidden costs to becoming an S Corp. It is not free to do it. So you need to make sure that if you're calculating those tax savings, you're also accounting for the fact that there will be added costs. So let's talk about the most obvious costs first, and then we're going to get to the more hidden ones at the end of this video. So the first more obvious cost is payroll. If you are now needing to be an employee of your business, which is a requirement of S Corp, you do need to pay yourself a reasonable salary. If you don't know anything about this, I have lots of content all about determining your reasonable salary, but you're likely going to want to have a payroll provider to make sure that all of your taxes are getting withheld properly and all of those payroll forms are being filed appropriately with the IRS. Now, that's not something that you have to do if you are a sole proprietor or single member LLC, because you just get to take distributions from your business when you have the money. But this is an added cost. Now, in the grand scheme, payroll providers aren't overly expensive for what they do, especially if you use one of the ones that I recommend. Definitely go check out jamietrull.com/payroll. I also have special deals with many different payroll providers. However, it can add up. So typically you're going to look at paying anywhere between $300 and maybe even up to $1,000, depending on the provider you use, to just run your payroll and manage that process for you. Now, if you're already running payroll because maybe you already have employees, and so this would just be adding yourself, it may be less expensive. But if you are your only employee, then this is probably going to be a little bit more of a cost for you. Now, again, if you want to check out some of the payroll providers that I recommend, definitely watch this video next. Now, the second, not quite as hidden cost is additional tax filing. So there will be another tax filing instead of just filing your 1040, which typically if you are a single member LLC or a sole proprietor, you would just add a schedule into your normal annual tax return, your 1040. In this case, you're going to have an extra tax return called an 1120S, and it's due a month before that April 15th deadline. And because this is a corporate return, it often is going to cost more than just a normal 1040 might cost you to be able to file. So typically, you're going to see this range from anywhere from about $750 for someone to file it up to a few $1,000s. And even if you DIY your current taxes, if you use TurboTax or something like that for your personal taxes, I highly, highly, highly recommend hiring someone to do your taxes for you as an S Corp, at least your corporate tax return, because it is trickier and doing it wrong can lead you down a road where you might end up with penalties and fines or just back taxes that you have to pay. Okay, so now we're getting into some of the more hidden costs, but these are important. So the third hidden cost is state level fees and compliance. So this very much varies based on the state that you are in, but it can be more costly in certain states to be an S corporation. And that can eat into some of these federal self-employment tax savings. So for example, in the state of Tennessee, where I live, there is a franchise tax, and that franchise tax is only going to apply to any earnings that I have that did not previously have payroll taxes taken out of it. So that means the state is going to add extra taxes on top of what I'm paying federally, and that's something that needs to be considered as well. Also, in states like California, just to have an LLC, which remember, you do need to have an entity in order to elect S Corp taxation. So you would need to be, say, an LLC in order to do it. And in the state of California, just to have an LLC, it's $800 minimum every single year. And that's even if you're not making any money. So that's why it's really important to get to know your state rules and see if any of those tax savings federally are going to be offset by additional costs with the state. And then you can factor that in when you're making your decision. And the fourth cost is going to be owner education and compliance. So at the end of the day, even if you do hire someone, you are responsible for doing things the correct way. Unfortunately, S Corp is not a set it and forget it thing. You are the one who's going to be responsible for many things, such as making sure that your pay is considered reasonable with the IRS, keeping track of separate and accurate financial statements, including a balance sheet. So previously, you may not have needed a balance sheet. If you are an S Corp, you are going to want to have full financial statements, including a balance sheet. And you're also going to need to track what's called your basis in the business. That's essentially your owner equity in the business. And the reason that that matters when you're an S Corp is that if you end up taking distributions from your business that are in excess of what's considered your basis, then you may inadvertently end up taking taxable distributions. So again, there's more things to pay attention to, more things that can go wrong, more things that can trigger additional taxes if you're not on top of it. So now I'm going to get into the even deeper hidden costs. And some of these are ones that are harder to put a dollar amount to, but they are things that you need to be aware of. So for example, I talk a lot on this channel about the tax strategy of hiring your minor kids. I'm a big fan of it. If it is done correctly, it can be a great way to shift income from a higher tax bracket, yours, to a lower tax bracket, your kids. However, if you've watched my content on this, you know that it gets more difficult when you are an S Corp to hire your kids. There are going to be more rules, more things that you need to do. You can still make it happen, but it isn't quite as easy and straightforward, and there is some additional cost to it versus if you were to hire them from an LLC or a sole proprietorship. So if you want to have a family business, that's something to definitely keep in mind. It may not be a reason not to do it, but you just want to be aware. And another big one that trips a lot of people up is the change in how your own out-of-pocket expenses are handled. So if you have business expenses that you as the owner are paying on your own behalf, let's say your business, you're using your phone 50% for business. Typically, if you were an LLC or sole proprietor, you could give that to your accountant. They would just add it to your Schedule C, no big deal. But it's very different when you are an S Corp. You actually have to have a more formalized plan, which is called an accountable plan. It's basically a reimbursement plan, but it basically spells out what you get reimbursed for. And that's how you need to be reimbursing yourself. And that makes sure that then any distributions you're taking don't end up becoming taxable. And that allows them to still be able to write them off for your business and reduce your total taxes. So you want to be really aware of that. That's something that can trip people up, and it can create additional taxes if they're not doing it correctly. Now, another hidden cost to consider is that being an S Corp can impact the amount that you are able to put into your retirement accounts. It really depends on the type of plan you set up, but you may now be limited in the calculation of your total maximum you can put into a retirement account, like a SEP account, based on your salary. And therefore, that could actually reduce the amount of contributions you can actually make. It really depends, and it can vary based on your situation, but again, something to keep an eye on. And the last thing to keep in mind as well, that I like to make sure people remember, is the fact that if you are paying less in Social Security and Medicare, i.e., those are also called payroll taxes or self-employment taxes, right? That's what we're saving on with an S Corp. Well, if you're paying in less Social Security, then that means later on your benefits that you're getting from Social Security may be reduced. So that's something to know and to think about. I typically don't consider that a game changer because, again, you're getting more money now, right? So if you were to take that money and invest it for your future or put it into into a retirement account, right? That's probably going to be better than relying on those Social Security benefits anyway. But it's just something to be aware of, that if we pay in less to Social Security, that may mean our Social Security benefits down the line are reduced. After all that, I know I sound like a Debbie Downer. Is being an S Corp even still worth it? And I would say that for many business owners, yes, my main business is an S corporation because it does make sense for me and it does save me money overall. However, I went into it eyes wide open and made sure to consider all of the things I've talked about today when making that decision. So if you want to delve into this a little bit more and see if it might make sense for you to be an S Corp, I go into more detail in my S Corp Switch Masterclass. It is a workshop where I walk through exactly when you might want to shift and some of the considerations around it. So if you're interested, definitely go check that out at jamietrull.com/switch. And also make sure to subscribe because I have lots of content on this channel all about being an S Corp and making sure that you follow the rules and you're paying yourself that reasonable salary. Thanks so much for watching, and I'll see you next time.